Hey guys, Muka here from StockAviator.com. I've been a moderator for about 2 weeks now and I've successfully called out multiple winning trades thus far. And I want to thank our members for the continual support and also to continue to challenge me and ask questions of me. And by doing that, you're making me a better trader and me a better teacher. So today, I want to briefly talk about taking profits and accepting losses. I've seen in chat and on Twitter, all the social medias, a lot of people who complain about how they didn't make a huge gain, or how a master trader failed to make a four-figure gain, or how you yourself had exited a trade too early. So is there really such a thing as exiting trades too early? When you have made profit, the simple answer is no. A lot of new traders expect to hit home runs with some of these trades, or they expect a master trader to net 4 or 5-figure gains. The reality is, new traders expect too much out of single stocks and single trades. If you look to hit a home run every time, the odds are you will take a larger loss in the long run and miss out on some of your key profits in the short term, as a lot of you did on mine. I'm not here to shame you for your mistakes, but I want you to learn from your mistakes, and I want you to learn from my mistakes as well, as I too have made these same fundamental mistakes. Anyone can click the buy trigger on a stock. That is the easiest part. The hardest part about trading is selling your position, whether it's for a win or loss. Greed, fear, and emotion will always get in the way, and you'll either want to accept the loss or get greedy and you want that extra little bit of gain. And that tends to make us lose our profits or take bigger losses. If you have a strategy when you enter a trade, stick to it. If it hits your stop loss, that is acceptable. If it hits your loss and bounces up for a gain, this is also acceptable. This is going to happen from time to time. We're going to see these. But if you didn't set a stop and it falls and you don't sell it and it falls more, and now you're stuck with too big of a loss to manage and it continues to fall and you're stuck holding the stock in hopes for a bounce back up. If you would have sold at your stop, you wouldn't be in this position to begin with. Second, you could have put that money into another trade that could be making you profit while you wait for this one to pop back up and return to your break-even point. As a trader, you don't want to become the bag holder at the end of the day, and you don't want to be the last person to the party, and you sure as heck don't want to be the last person to leave the party. So, what I want to tell all you traders out there is first think about how you're going to exit this trade when it goes south. Where is your level of support? Where is your entry point? Where is your exit point? After you've learned to protect yourself from the loss, now you can think about taking the profits. Don't get emotionally attached. Just because you had a dream that the stock doubled or tripled your money, let's be realistic and rational. Take what the market will give you and then move on to the next trade. People often ask us if it is still a good buy 20 to 30% after the trade breaks out. And at this point, I'm probably taking shares off the table and protecting my profits. I have no idea if the stock will go up 100% or if it'll only go up 20%. So generally my advice is no, just move on. It is key to enter stocks at a strong position with minimal downside risk and high potential for gains. Do not try to catch a falling knife and do not try to chase the trend up. Another common question people ask me is, what percent of loss or what percent of gain do you take? My answer is vague as it is relative to the trade and the chart. If a stock has already gone up 20%, I'm probably taking shares off the table at this point, unless I see another breakout potential. Even then, I'm going to take some shares off and let some shares ride. If the trend is weak, I will exit before the 20%. As for stop losses go, my strategy puts my stop losses at a low risk spot to take minimal risks depending on where I enter my trade. Remember, you can always buy back into a stock later or add to your position at another point. Protect your profits and minimize your losses. New traders often think that they need to make profit every single day, and that forces themselves into bad trades. Begin to lose money day after day. Honestly, if my account grows at any single amount during any single week, it's been successful. I've managed to minimize my loss and take profits when they're there. You're going to have red days and you're going to have green days. The goal here is to have red days that are a less amount than your green days. So that being said, I'll go in depth further in my premium member videos as they are released. So if you want to talk strategy, find hot stocks, join our nightly watch list and live trade chat room, click on the link below for a trial offer and a discounted rate on your first month.